Hey there, deep divers. Today, we're tackling something I know a lot of us grapple with, spotting those, profitable trades in the financial markets. It can feel pretty wild out there.
It really can.
We're going to unpack a specific strategy today, one on TradingView that, well, some folks think gives a real edge, almost like a crystal ball, they say. I'm definitely curious.
Yeah, it's true. The market feels unpredictable most of the time, right?
Yeah.
And everyone's always looking for better tools, better approaches.
Absolutely.
So this deep dive, it isn't about finding some magic bullet that removes all risk, because that's just not realistic.
Right.
But it is about understanding a structured way, using specific tools to maybe anticipate moves better, giving you a clearer map, you could say.
Okay, let's unpack this then. What's the core idea, the thinking behind this approach to analyzing the market, and what are the specific tools we're actually looking at?
Well, at its heart, the strategy is trying to track the big players, institutional money, and also gauge the overall market feeling, the sentiment.
Okay, tracking the big money. How?
We use a couple of key indicators from TradingView. First, there's the Tilson T3 Strategy. It's really good at smoothing price action and showing the true trend, cuts down on false signals. And then we pair that with the top-bottom indicator. That one helps pinpoint potential reversal spots, sort of confirming what the T3 might be suggesting about those bigger moves.
Interesting. So if someone listening wanted to explore this themselves, how do they, get started? How do you even add these tools on TradingView?
Oh, it's actually quite straightforward. For the Tilson T3, you just click Indicators on your TradingView chart.
Yep.
Then in the search bar, type Tilson T3 Strategy, click it, and boom, it's on your chart.
Simple enough. Are there settings we need to tweak?
Yeah, a couple of small adjustments seem to work well for this strategy.
Yeah.
You want to find the T3 length setting. It usually defaults to 8. Change that to 12.
12, okay.
And sometimes there's a second T3 length input, might be called T3 length 505 or something similar. That one often defaults to 10, just leave it at 10.
Yeah, got it. So T3 length to 12, the other stays at 10. Why those changes?
It just helps filter out a bit more noise, especially on something like a 15-minute chart, which what this strategy often uses, gives you clearer signals about the trend.
Okay, makes sense. So we've got the Tilson T3 on the chart, settings adjusted. What are we actually looking for now? How does this line tell us anything?
You'll see the line change, color red and green. It's pretty visual.
Right.
For a 15-minute chart, the basic idea is when the line turns green and the price itself moves above that green line, that's like your first heads up for a potential buy.
Okay, green and price above.
Exactly. And the flip side, if the line turns red and the price drops below that red line, that's your initial signal for a potential sell. It's that first visual clue about direction.
That sounds like a good starting point, yeah. But you mentioned a second indicator for confirmation. Trading on just one can be tricky. How does the top-bottom indicator fit in?
Exactly right.
Yeah.
You rarely want to rely on just one thing. The top-bottom indicator adds that extra layer of confirmation. You add it the same way. Click Indicators, search top-bottom, add it.
Okay. Any settings, tweaks for that one?
Yep, another small adjustment. Find the bottom period and top period settings. They usually default to 14. Change both of them to 12.
Both to 12. Why 12 again?
It just seems to align it a bit better with the T3 setting of 12 for identifying those potential peaks and troughs on the 15-minute time frame we're discussing. Helps synchronize the signals.
Right, synchronizing. This is where it gets really interesting, I think. How do these two indicators actually work together? What's the combined signal, the secret sauce for making a decision?
Yeah, this is the core of it. For a buy signal, you need a few things to line up. One, the Tilson T3 line has to be green, and the price needs to be trading above it.
Okay, condition 1.
2, at the same time, the top-bottom indicator needs to give you a buy signal down below.
Condition 2, confirmation.
And 3, you ideally want to see this confirmed by a bullish candle forming right then. A candle showing strong buying pressure.
Got it. T3 green plus price above plus top bottom buy plus bullish candle.
That's your entry trigger for a buy. And for a sell signal, it's just a mirror image.
Okay.
Tilson T3 line is red, price is below it. And the top bottom indicator gives a sell signal. And you see a bearish candle form showing selling pressure.
Red T3 plus price below plus top bottom sell plus bearish candle. Seems clear. Can you walk us through an example? What does this look like on an actual chart?
Absolutely. Let's imagine we're looking at, say, a gold chart on the 15-minute time frame.
Okay, goal 15 minute.
For a buy. You see the T3 line flick green, price pops above it. You glance down, and the top-bottom indicator flashes a buy signal. Then you see a nice strong bullish candle close right there.
All checks pass.
Yep. So you'd place your buy order, Your stop loss would go just below the recent swing low to protect yourself.
Sensible. And the target. A common approach here is aiming for a 1 to 1.5 risk-reward ratio. So if your stop loss is, say, 10 pips away, you'd aim for a 15-pip profit target. And we've seen examples where this setup plays out and hits that target nicely.
Okay, and the sell side.
Same logic. Reversed. T3 goes red, price drops below.
Yeah.
Top bottom signal sell. You spot a clear bearish candle confirming the downward momentum. You place a sell order, put your stop loss just above the recent swing high, again aiming for that 1 to 1.5 risk reward. And yeah, examples show this hitting the target too.
Okay, so it sounds like a potentially solid framework, seems logical, but we always have to talk about this. Trading involves risk, right? It's not guaranteed. What's the crucial reminder here?
Oh, absolutely crucial. You've hit the nail on the head. Risk management, it's everything.
Yeah.
Look, while this strategy, like any strategy, aims for winning trades, and yes, trades can hit those 1.5R targets, they can also hit your stop loss. That's just the reality of the markets.
For sure. Yeah. Losses happen. They do. So understanding position sizing, knowing where your stop is before you enter, sticking to your plan, that's paramount. It's the foundation. Without it, no strategy works long term.
That's such an important point. So we've basically walked through what seems like a straightforward and potentially effective strategy for 15-minute scalping using this specific Tilson T3 and top-bottom combo on TradingView. It's about making informed choices based on signals.
It is. It gives you a framework.
Yeah.
But it leads to a final thought, doesn't it?
Yeah.
Even when we have tools like these, tools designed to help us anticipate moves, to maybe give us that edge, that clearer view, what is that constant non-negotiable need for strict risk management? Tell us. It tells us about the fundamental unpredictability that always exists in the markets, right? And maybe about our own journey, always learning, always adapting, something to really think about.